I get a lot of questions on how is this unit a tax deduction? So I'm going to explain to you a little bit more on taxes. So just know that I'm not a tax advisor, so this stuff right here that we're going to talk about, make sure you talk to your CPA or tax accountant about it so they can guide you the best way. So this is how we write off the device and other deductions. So why this unit is not only an asset to your health, but it's also an asset to your finances. It will cost you more not to own one than to own one after I get done explaining this to you. So let's just imagine you're like 98% of people that you're an employee, which is awesome, okay? So you're an employee, and as an employee, let's just imagine for a minute that you make $100,000 per year. Okay, so under tax law 179, this tax law allows you to write up to $500,000 of deductions when you have a new business startup. So when you own a Kangen machine, you now are in business for yourself, meaning you have an in-home based business. And what that does, it sets you up for success in your taxes and your income levels. So right now, you're an employee and you don't have a business, let's just imagine. You're going to be paying taxes on $100,000 that year or this year. And then you have, of course, the taxes that are taken out of your check. We'll call these your taxes withheld. Okay, so you have your taxes that are withheld out of your check. Okay, so now you have $100,000 up here. So now let's just imagine that you buy a new vehicle. That vehicle is going to cost you $20,000, let's just say. Okay, so we have a $20,000 vehicle. Now let's say you went on a vacation to Hawaii and you took your whole entire family on that vacation. Let's just say that that vacation cost you $10,000 because you went on some excursions, you rented a houseboat out there and you just had a grand time, right? So that was $10,000. Let's just say you went out to eat, you had a cell phone bill, you got some new computers, you got some office furniture. Let's just imagine that that cost you $30,000 with just meals and entertainment and other things that you were doing. Okay, so now at the end of the year, you're going to have to pay taxes on $100,000. So you still had these things here that you paid for in your life, right? Okay, so now this is where your business comes. So as a business owner, you get deductions. So for instance, this car that was $20,000 car, you take $100,000 and you minus, let's just do it over here, $100,000, you subtract $20,000 for your car. And the reason for this is because your vehicle is how you get around to deliver water. It's how you get around to chiropractors' offices and restaurant owners and other people that you're in contact with every day to talk about the water. That's your vehicle, that's your business vehicle. So with that, you're allowed to write that off as a deduction. So it deducts from your income. Now, we have that vacation, that Hawaii vacation that cost you $10,000. That vacation you used as prospecting. So you're like me and you take your machine with you, you've got your bottle on the plane with you, you're sitting next to somebody and all of a sudden they're like, oh my gosh, how'd you get that water in the plane? You're like, well, this is my medical water, it helps me with my health. Pretty soon they're like, well, how do I own one? You're like, well, actually I'm a business trip right now to Hawaii where I'm going to go educate people on the proper hydration. I'd be happy to get you involved. So now this vacation was actually not a vacation, it was a prospecting event. Okay, so that was another $10,000 here. Now we have meals, entertainment. Let's say you had your family over and you did this whole entire big meal. Well, that's going to be part of your meals because if you're like me, your family comes over, the machine's there, and all of a sudden, you've got the demonstration going on, you've got your family members filling up with jugs, and now your home is part of a deduction as well, which I didn't even talk about that. So now that is your meals. Let's just call this meals and entertainment. Okay, so meals and entertainment, we have $30,000 deductions here. Okay, so that's your meals. So you're going to subtract that from the $100,000. So on top of that, let's also add in an additional $20,000 for office furniture, cell phone, because you're talking to people about water, And then you also are allowed to write up to 300 square feet of your home. Your children also can become tax deductions because they're working for you. There's so many different deductions. So 300 square feet of your home, just a couple examples for you. Another 20,000. Okay, so now we're gonna do the math. So remember, depending on your tax bracket, so at $100,000, your tax is probably around the 20 to 30%. So out of this taxes, each year, you're gonna have to pay about $25,000 to the government because that's your tax bracket. So depending on how much they took out of your monthly check would kind of depend on how much either you're gonna have to pay or you're gonna give back. And since I don't know your paycheck and what you're getting withdrawn, I can't advise you on that, but you have a tax advisor for that. So here we go. We're gonna see all these things that were costing us anyways. We wrap up into our business because it was a business expense. 30, 40, 50, 60, 70, 80. $80,000 we spent on our business this year, right? We did the meals with our family. They were all coming over. We had to have the meals for our business. We had the Hawaii vacation. We had the car that we just purchased. That is $80,000 of deductions. So now, instead of actually making $100,000, you only received $20,000. So that puts you in a different tax bracket, if any. And then that money that got withheld, you typically, I can't tell you exactly, but typically what's going to happen is you're going to get money back at the end of the year because of your business. So that is how this unit not only helps you with your health, but it helps with your finances. And I don't think a lot of people understand that, because if they did, they would all be helping people. Now, the government says, hey, you must have the intention of helping people. You can't just buy this unit and say, hey, I'm buying it for the tax deductions. You cannot do that. And if you don't make income after 3 years, it's considered a hobby and you cannot keep deducting things. So I highly recommend, if you have a unit already and you're not out there helping people, you deserve to go out there, because it makes you feel so good every day when you sleep at night, when you know you're making a difference in this world. And if I didn't share this with people 7 years ago, the people that are watching this video most likely wouldn't have been helped either. So go out there and take action. Now that you know this information, get with a good CPA that can help do your taxes every year. And also, you want to start an LLC eventually, so you're not getting self-employment taxes, which can add up to quite a lot. So that's going to help you with your taxes. And until next time, I want you to be healthy, be happy, and be free.